if you have no credit,
Zero credit.
there's still a loan you can get for a home.
Okay.
But we have to see 3 trade lines, like your insurance maybe, Verizon, or your cell phone bill, any cell phone bill.
Oh, I see.
Or insurance. We just have to show that you're paying 3 accounts and you've done it for a year.
Really?
With no late payments. Yeah.
How does that quantify to a number?
Well, you're not going to have a credit score.
Right.
But it was showing us that you can make payments on time.
Okay.
And you have to have a down payment. You have to have 3.5% down for that program. And then once you get your mortgage, then you'll start establishing your credit. So
it's just you are paying bills on time on a regular basis. 6 months or a year? What is it?
For a year.
For a year.
3 of them for a year.
Cool.
Yeah.
And then you can qualify without a credit score.
Without a credit score.
Wow.
The rate will be a little bit higher, the interest rate, but not much. And it's worth it.
Okay. It's totally worth it.
I think it's worth it.
Yes, absolutely, to buy a house.
Yeah.
Out-of-pocket expenses.
Out-of-pocket expenses. So really, you can buy a home with 0 down.
Right, there are programs out there.
So, but there's also, at the beginning, you have to put down earnest money, right? So earnest money, I typically see about $1,000 for that.
Yep.
And so that's something that comes out of your pocket. But if the seller agrees to pay your closing costs, then you'll get that back at the end.
What are the percentages that the seller pays closing costs?
Oh, now a lot.
Oh, what do you mean now versus?
Well, it's pretty cyclical. It depends if it's a buyer's market or a seller's market.
Right on.
But right now they're paying, almost every single transaction we see has sellers paying closing costs.
Really? And so how many years ago was it that buyers were paying all the closing costs?
Oh, was it this summer or last summer? Remember we had all these multiple offers on each property?
Yes.
Then that's when we didn't have.
Yeah, it was the past 2 years. When my wife was buying her house 3 years ago, there was a lot of multiple offers.
It was terrible. So people would make like 8 or 10 offers before their offer got accepted. So at that point, sellers weren't paying closing costs.
Yeah.
But in a normal market, sellers do pay closing costs.
Huh, interesting.
Yeah, they might increase the sales price to cover it.
The balance between what the seller's bringing in and getting from their house and what they have to pay out of pocket.
Yeah, like say if the sales price is $220 and closing costs are $7,000, they can say, we're going to offer you $227 for your house, but we want you to pay $7 of our closing costs.
How does that benefit? Is just out-of-pocket expenses versus being paid at the end?
Right. So then the seller, they don't really have to pay those closing costs. It just comes off their bottom line.
Right.
But then the buyer doesn't have to come in with that $7,000.
What are some other things that would come out of that major check that the seller gets? Because you can, besides the seller paying closing costs at the end of the transaction, what else could they be paying for?
They have seller closing costs. So I always tell people, just good rule of thumb, it's $2,000 for seller closing costs. But it's just going to depend on the sales price and what time of year we're at. So.
Okay. But like being able to pay for the inspection or paying for repairs.
So the out-of-pocket. Oh, for the seller?
Yeah, I mean, I guess this is kind of off of the out-of-pocket thing, but I'm really curious about what gets paid for from
the seller.
Yeah, from the seller.
Well, so the seller, they're going to have to pay off their loans that they owe on the house. They're going to have to pay any real estate commissions. And they're going to have to pay their seller costs, which are about $2,000, and then they're going to have to pay buyer's closing costs if they agree to do that.
And out of those,
and if there's any repairs too.
Right, they can pay for those. Can come out of it.
Yep.
What are some of the crazy things that you've seen coming out of the that the seller ends up paying for, like inspections or?
Well, I mean, it's pretty straightforward. I haven't seen anything too crazy that they've, because it's pretty straightforward. The sales contract is straightforward.
It's always just interesting to see real estate negotiations.
Oh, sometimes they're like back child support or.
Whoa, paid out of. Interesting.
Yeah.
Might as well.
Yeah, or liens they don't know about.
Interesting. Yeah. Now that's the title.
Yes, that's why you have to look at your title report once it comes out.